Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 14th of March 2021. Lately there's been lots of chatter about inflation, and then you've got people on the other side who are worried about us being headed for massive deflation. Now the views of either side of this debate often use various metrics to support their arguments. And so today I wanted to talk about some of these metrics. Here are some of the metrics that people classically associate with an inflationary environment. Of course, by definition, the money supply increases. Interest rates are usually high, the velocity of money is high, and the nominal value of assets, including stocks, usually rises. This all sounds quite reasonable, doesn't it? And this is what we're classically taught. Let's look at some real life examples of inflation, and let's see what has happened in terms of these metrics in each case. Now, all of the examples that I'm going to discuss are actual current cases of inflation. Let's start with Argentina. Inflation was stable for about 10 years, and then, as you can see here, in 2013, inflation started rising. And it actually rose in this stair-step fashion, as you can see here. So you got inflation followed by disinflation. Initially, inflation rose above 20% over here, then it hit 40% over here, and then the next rise was even higher, reaching almost 60% in 2019. Of course, the money supply is going up, and this looks like an exponential curve, doesn't it? And there's not really any significant dips. You can see a little one here maybe, but you know, they're all very minor, the dips. The general direction is up, 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 up. The interest rate has also been rising since 2013, as you can see here. And it actually went higher than the inflation rate in 2019. So that's over here. It went above 80% here. And at that time, as we saw in the previous chart, the inflation rate was 60%. So that means the real interest rate was plus 20%. Since 2013, the stock index, as you can see here, has been on a tear, rising over 10x there. Now, also note that there's a huge amount of volatility here and over here. This is quite large. And actually, what you see here is two lots of 40% drops in terms of the stock prices. So as you can see, this isn't an easy ride up. Now, I was unable to find a chart for the velocity of money for Argentina, so I tried to actually find what the value was for the velocity, and I couldn't find that either. So I thought, well, why don't I just try and calculate it myself? So the velocity of money is the GDP divided by the money supply. So I hunted around and found what the values were for the GDP and for the money supply. But of course, these can be quoted in either US dollars or in the local currency, Argentinian pesos. And it's interesting because I got two completely different values here. Am I doing something wrong? I don't know. If anyone's got an answer for this, but these are very, very different values for velocity. 4.7 is considered high and 0.09 is considered very low. So which is it? Which is the correct answer? I've actually got no idea. So to summarise, Argentina has a rising and volatile inflation rate. Interest rates are also rising, and that's what we'd expect from our model that we talked about at the beginning. Stock prices are rising, but are volatile. And in terms of velocity, well, it's high in terms of US dollars, but very low in terms of the local currency. And as I said, I don't know which of those is correct. Let's move on to look at Turkey, which has seen a rise in inflation from single figures to double figures. So here it was roughly single figures, and it went up to over 25% here. And this peak here occurred in 2018. As with Argentina, the money supply has been increasing, and again we've got this steep curve going upwards. Interest rates have been pretty much tracking the inflation rate. So when inflation rose, so did the interest rate, and so that matches the peak in the interest rate we saw in the previous chart. The Turkish stock index has been volatile, and note that it still has been rising over time for over 2 decades now. The peak that we see over here coincides with that peak in inflation that we saw in 2018. And the velocity of money is actually on the low side. I made it similar in both US dollars and in the local currency. And it's not actually far off from the value of the velocity of money that's in USA at the moment. In summary, in Turkey, the interest rates rose in line with the rate of inflation. Stocks have continued to rise but have been volatile. And the strange thing is that this velocity is actually low. That's not what we'd expect. And finally, we take a look at Lebanon, which saw a sudden sharp rise in inflation in 2020. You can see that here. In fact, just before 2020 was when the rise began. In 2019, you can see that the rate of inflation was close to 0, actually. And this spike here goes up to almost 150%. And this is very, very rapid, notice there. You can see that up until 2019, the money supply was persistently rising. But isn't it strange? After that, money supply actually dropped. That's not what we'd expect. In terms of interest rates, well, in 2020, you can see here, the interest rate plummeted down here. So it went from 10% down to just over 4%. Isn't that the opposite of what you'd expect? The Lebanese stock market has been in a downtrend since 2017 over here. And you can see that when we had that spike in inflation, which started just before 2020 over here, so this is the period of inflation, you can see actually the stock market dropped around 25%. Again, that's not really what we'd expect in an inflationary environment. What about the velocity? Well, again, with this one, the velocity depended on what currency you're using. So in US dollars, I made it 0.4, whereas in Lebanese pounds, it was 2.52. But still, I mean, these aren't hugely high values. Not something you'd expect with an inflation rate of 150%. It's all very bizarre. So, in summary, for Lebanon, the inflation was seemed to be associated with a relatively low velocity. Interest rates have been low, and stocks have been dropping. All of those just seem the opposite of what you'd expect. As you can see, we're not really getting consistent metrics here. What about gold prices in each of these countries? We can see that when priced in the local currency, all of these have seen consistent rises. But bizarrely, Lebanon has seen the lowest rise in percentage terms, even though it had the highest inflation rate of everything. Why is that? Well, it turns out that the Lebanese pound is pegged to the US dollar, but the official peg of 1,500 Lebanese pounds per dollar only applies to imported fuel and pharmaceuticals. On the black market, it's more like £8,000 per dollar. And I think that probably explains a lot of the discrepancies we saw in the metrics that I discussed for Lebanon. I think Turkey has a soft peg to the US dollar, and the Argentine peso is not pegged at all. And so that kind of explains the differences in these gold prices. But in terms of gold in Lebanon, I'm not even sure that you'd be able to buy gold for the price that's shown here. In conclusion, there are multiple factors that contribute to inflation, and the situation will vary between countries. And basically, I don't think you can rely on official metrics to make your judgment about whether inflation is coming necessarily. It can get quite complicated trying to look at what's going on, particularly if you rely on the standard metrics that we've discussed, and official figures can be way off. For example, although the official inflation rate in Lebanon is quoted to be around 150%, I've heard that food prices increased by as much as 400%. So figures and metrics can be fudged in a variety of ways. And so analysing this stuff can get very complicated, and it's very easy to be misled. In many ways, gold overcomes all of these issues and complications. In the long term, we know that gold maintains its purchasing power, and so we don't really need to rely on complicated calculations based on unreliable data. One thing that I have observed in researching this topic is that as inflation progresses, it becomes more and more difficult to get reliable data. Often data becomes either delayed or is discontinued, and any data that does come through that's released is often inaccurate or fudged in some way or other. That might sound very cynical, but I'm just noticing it more and more. Gold remains simple, honest, and straightforward. Next up, the market update. Let's start with gold priced in US dollars on the weekly scale. Well, I reckon that it's time for a bit of Chumbawamba. Okay, I know that it's a bit too early to say something like that, but look, I've got to keep you guys entertained. Okay, so last week we were talking about this trend line over here, as well as the longer term upsloping trend line. And well, that's interesting, isn't it? Although this longer term trend line appeared to have broken, you can see that both wicks go below it, but we didn't really get a close below that level. So does that mean those wicks are of any significance? I don't know, but I'm hopeful. And of course, this lower sloping trend line did not break. So again, another piece of good news. And we had a green candle. So of course, gold had got knocked down, but it did get up again. The question is, will it stay up? So yeah, look, it's too early to call a bottom right now, but you know, I think it's possible. We've had 3 touches of this trend line now, so I'm hoping that it just goes back up through here, and particularly since price is moving in this upsloping channel, and from the fundamentals, I'm feeling bullish about it as well. So you know, I'm still working on this bullish model until it breaks. And so far, I don't think it's broken yet. So what are we looking for? Well, I think 1800 is going to be a little bit of resistance here. And of course, we want price to go up 1900 to 1950, and then we can be really bullish then. But you know, I think this next run is going to be pretty epic. And so, you know, I don't want to miss it either. So it just depends on, you know, your risk appetite and what your attitude is towards gold about when you get in. But yeah, I just get the feeling that this could be a turnaround. But look, there's no guarantees. There are other possibilities as well, of course. I mean, it could come up here and then come back down before moving up. I don't know. I don't think that's hugely likely. I don't think we're going to get a break of this trend line again either. But let's see. The market will do what it wants to do. Another interesting thing that I spotted was if you look at the hourly scale for gold, and what I've done is compare it here to the 10-year Treasury yield, which is shown in orange here. And so far we've been talking about how when the yields go up, then gold prices have been dropping. And of course, we've had a steep rise over the last few days in the 10-year yield. But interestingly, there's been a little bit of a flip in terms of how gold reacts to this. And so initially gold was getting knocked down, but this time there seems to be a positive correlation here. Both are moving in the upwards direction at the same time. So I thought that was interesting as well. I don't know how much further the yields can rise, and that's the big question. We're looking at the real yields really if we're talking about gold. So they're becoming less negative. But look, it depends on what your attitude is to those kind of statistics, as I spoke about earlier in the show. Do you think real yields are the same as reality? I don't think so. I think in reality, it's a lot more negative than the figures are suggesting, and that's why I'm so positive about the gold price. But yeah, anyway, next week we've got the FOMC meeting, which should be interesting. I don't think they're going to outright say, oh yeah, we're going to do yield curve control. I think it will just be, little hints, little tweaks in what they say. So don't expect anything dramatic in terms of what they say. It's more how it's interpreted that will affect what the gold price does. But yeah, as I said, I think we're on the up from here. Now, in last week's show, someone commented about how a lot of my charts don't show the inflation-adjusted gold price. And, I think that's a good point when you're looking particularly at longer-term charts. The problem I have is that it's quite difficult to overlay multiple variables. So, for instance, if I'm looking at gold versus, some other variable, such as 10-year yields or whatever, a lot of that data doesn't go back far enough on TradingView, and so you can't really compare them, and so sometimes I have to look elsewhere for those charts, and they're not necessarily going to be inflation adjusted. The other thing is that I didn't know how to inflation adjust on TradingView, and then I thought, well, I can't make excuses. You guys do get me to up my game, so I've got to try and find out how you can do that. And I found somewhere where it says that what you do is you put the gold price and multiply it by the current price divided by the CPI. And so that's on the economy tab on TradingView. So I gave that a go. I plugged that in, and this is what it came out with. So this is saying gold's at about 11,000-ish. But yeah, I don't know. I'm not entirely sure if I've done this correctly, but it does give you a relative idea compared to the previous peak. But yeah, let me know if you think that there's a different way of doing this. I think it would be useful, and there are some other parameters that we can overlay with this. But the interesting one was silver, actually, because with silver, it's coming out as the peak in the 1980s was almost $12 here, and currently it's not even $3, it's about $2.60, I think. Basically what this shows is that silver is cheap as chips. Even if you think about the buying the physical with the premiums, even with all that, it's cheap as chips. And I'm convinced this is probably one of the most undervalued commodities out there right now. There are a couple of others that I can think of, but yeah, silver is up there. It's super, super cheap right now, I reckon. And it's not going to stay that way forever. Okay, let's take a closer look at silver priced in US dollars on the daily scale. and we had this long-term upsloping trend line. Price poked below it, but remember I said I wasn't too worried because silver tends to do that. It just fakes people out. It does all kinds of strange, bizarre things to mess with your head. Anyway, so price went up, back up above there. Now this $26 line has been support and resistance. It's been pretty reliable so far. And it tried to poke above it, but couldn't really close above it and got pushed down again. But here again, we have a long lower wick below there and price closed just on that trend line. What we need to see going forwards is, first of all, we don't want to see a new low below here and certainly not below here. I don't think that's going to happen somehow though. Ideally what we want to see is for this price to hop up back into this region over here, and it'll probably hang around there for a little while. Now if we look back here, remember that this region, we spent a lot of time in this area here, and so I think if we do hop back in there, we're likely to squeeze in that area for maybe, it could be another month, it could be longer, I don't know. But you know, the fact that we've spent a lot of time here, unless we get some dramatic event, I think we're probably going to hop up above 26, stay between 26 and 28 for a little while. And what we really want is to hop up into the next zone, which is over here between 28 and 30. Look, with silver and with gold, it's something that requires patience. And that's what a lot of investors don't actually have. They want everything to happen tomorrow. With silver, that's not going to be the case. But those with patience often get rewarded, I reckon. Okay, let's move on to the GDX on the daily scale. And we've been in this long downtrend. It's lasted months and months and months. It's been grinding and painful. But again, I think we're getting close to the end still. I know there are people that still think that it's going to drop down. Look here, this area got hammered quite a lot and it didn't break through it. We've got lots of long wicks over here. And then price gapped up over here. And we seem to be in this upsloping channel. Now, if we can break above this channel, that's going to be quite positive, I think. We're nearly there, but yeah, we've just got to wait. I mean, of course, it could turn around and come back here to retest this support here. But this support zone has been long-term support for years. And so I'm thinking that's going to hold, particularly if the gold price does do the turnaround that we're hoping for. So yeah, still early days, but I'm still hopeful. Of course, the big one that we're looking for is this breakout above around 35 level, but I think we're still a way away from that. So yeah, we just got to be patient. Will this channel break upwards or downwards? And another one to look at, this is the HUI to gold ratio on the weekly scale. And so remember with this, any downwards movements means that gold is outperforming the miners, and upwards movement or green candles say that the miners are outperforming gold. And now we've had 2 weeks in a row where the miners have outperformed gold. What we really want is a great breakout above the 0.18 level here. I think that's going to be massive when that happens. But we do have to get through this here, which is at about 17. So we've got a little way to go there as well. But yeah, that's going to be huge. The miners are going to do really well if we can get above that level, I reckon. And then we have the junior silver miners, so SILJ on the weekly scale. And again, in the longer term, on the monthly scale, we've got this squeezing pattern, and we're on the upper end of that squeezing pattern, and we've tested that upper trend line a couple of times now. This is good news over here. So we bounced off that lower trend line. We never broke through it, so that's positive. So what's happening here is we're making higher lows, and we had a nice green candle up here. So we're heading back up hopefully towards the top of this channel. And certainly looking at my miners, I think that's probably what's going to happen. No guarantees, but again, you know, this is just my opinion. And what we're really looking for is a breakout above 17.5 there. And if it was a decisive one, that's going to be huge as well. I think the silver miners could potentially do hugely well. I think to break down below this would be pretty bad, but I'm just doubtful that that's going to happen. So yeah, still feeling positive, but tentatively so. Look, granted, we don't know how this is going to pan out, and you just got to take it step by step. But you know, you don't also, you've got to kind of balance being overly cautious as well, because sometimes if you wait for everything to finally confirm, then you've missed quite a big chunk of the move as well. So it's kind of balancing your risk reward ratio there. Right, that's it from me for this week. Don't forget to like and subscribe, and we will see you next week. All the best. Bye.